A look at any earnings calendar this week will show you a vast array of financial services, trading, investing corporations producing their earnings results this week. So an important week for that sector. You know, the likes of JP Morgan, Goldman Sachs, Morgan Stanley, Charles Schwab, a lot of them. It's all out this week, but I'm going to focus on Citigroup. They report on Thursday. They've been struggling along with quite a few of the other big players, especially since the end of last year. So I'm going to have a look at the charts. I'm going to throw in a few options trading ideas there as well. I'm going to try and work out where that price is going next. So with that, let's take a look at the analysis. Firstly, a quick look at that earnings calendar I talked about. This one courtesy of investing.com. We got on Wednesday JP Morgan, BlackRock, First Republic Bank, and then Thursday Wells Fargo, Morgan Stanley, Goldman Sachs, Citigroup, US Bancorp, PNC Financial, State Street, and then the Monday following week we got Bank of America, Charles Schwab, Bank of New York Mellon, and Synchrony Financial. So you can see it is a plethora of financial stocks all announcing their earnings at the moment. So straight into the weekly line chart, and my first impression are that it doesn't really like to go outside of $36 and $81. Look at that range. Away from 2016 it went up to 81 and then back down, and then bottomed at 36, which was the low again in 2016 that we saw in 2020. Then it went back up to just about 81 again and then pulled back down. So it's bouncing within that range at the moment. Where it's going next, well, the odds probably are to stay within that range. It's quite a wide one, so we got 47 and then 36 to the downside, bounces back. It's going to use those key Fibonacci. I think that's 61.8% at about $64-65. Got a lot of price noise and action through there, and all the way up to that 78.6% at just over $70. So range bound in a wide range, and like I say, with earnings out this week, it's really looking like a 50-50 play at the moment. So for the 4-line break chart, we have a bullish reversal opportunity for you. Aggressive $51.6, a bit more conservative $53.6. So that's some numbers there for the bulls amongst you. And the daily Heikin-Ashi chart, signals are bearish at the moment, just starting to warm up and look a bit more bullish. Volatility also picking up, heading towards its longer term average in the early 30%. Volume still staying below its longer term average. And on terms of price, the 2 standard deviation regression, light pink, light blue shaded areas, pretty flat, so signifying a flat trend, and the price pretty much staying within there. Just poked its head through recently to the bottom side there and just reverted back in. Got that sell signal on the 2-line pink box breakout setup. So at the moment, that slightly downtrend since July of last year, it's a feeling of a weak bearish setup at the moment. And the Renko chart, I've used a 70 cents block size. Our signals at the bottom, well, the DMI is bearish, so that's for the trend, and the 2 signals above that, the stochastics and the regression, starting like the Heikin-Ashi chart to warm up to the upside, but at the moment call that weak bearish. Now heading on to the price, trend has been down like we've seen, but over the longer term a lot more flat within that range. Do have a current sell signal in play at the moment from the 2 pink line box breakout, and that bounced at that 78.6% Fibonacci line around about $49.50. Any more downside, then next stop $41 and then into the early 30s. A bounce from here up, it's got to get through the 61.8% Fibonacci in the mid 50s, then we're talking probably $65. The highs around the 80, and like I say, we're getting into new territory when we start to break through these sort of zones it's 90.95 after that. So into my broker first trade into the options play scenario builder, and I've put in first up a straddle position, June expiry, around the $52.50 strike. It's not a great play actually. It's going to cost you $600, so not particularly liking that one very much. But I've given you two different plays, the next two in terms of options. I've got an income one, the bullish put spread. If you think there could be a recovery on the cards in terms of price, doesn't look too bad actually. It's the 57.5 puts in there. And finally a June 17, 42.5, 52.5 put vertical bearish point of view. It's going to cost you $334. That's with a $1,000 investment, score of 123, so that's probably the pick of the three at the moment. That last one, if you're not quite as bearish as, you know, going all out on, say, the puts. So some options ideas for you there to think about. So in terms of score based on the technicals, it's bearish for Citigroup, the Heikin Ashi slightly stronger than the Renko. Short term looking a lot more bearish. If you are bullish of the stock, then a couple of numbers in the top right for you there using the forward line break chart as possible entry points. In terms of targets, 2.3 to 1 and 4.9 to 1 to the upside, and 1.23 and 2.15 to the downside. So overall though, score of bearish for Citigroup at the moment. So Citigroup looking a bit stale, bit bearish at the moment. It's been interesting to see how the earnings season for these banks and financial companies work out this week. It's not been going great for them, like I said, for the last few months. So is this a turnaround time for them? We will see. But Citigroup at the moment, don't think it's looking that great a stock. A lot of options activity out there, and it's one of the bigger players in the options market. So some options ideas also for you to think about within the video. Let me know in the comments below where you think Citigroup and the financial services sector is heading next. Like to hear from you there. If you like today's video, please give us the thumbs up. Don't forget to hit that bell and subscribe buttons to get notification of other content I'll be producing. And all that's left for me to say now is thanks for watching, good luck with the trading, and I'll see you in the next video. Thank you.